The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the January 5th. Magnificent Monday edition of Hour 2 of The Trader's Edge. I'm your host, Steve Rhodes, and I sure hope that you're off to a great start of your day, and most importantly, that you had a great, relaxing holiday, that you took in friends, family, lots of football. You know, didn't get any better than this holiday football season out here. Of course, we still have a little bit more football out there. How could they not call an interference call on that play in Dallas and Detroit in that last 3 minutes of play out there? Sounds like the fix was in. But hey, folks, look, let's make sure that what you and I do is we don't worry about bad calls out there. We just simply move on, and let's make sure that you and I, we do everything in our power to have a great day, an extraordinary day, and most importantly, a terrific 2015. Of course, it's always remember what's talked about is a dream. What's envisioned, that becomes exciting. What's planned becomes possible, but what's scheduled becomes real. And I want to thank you for scheduling your time with here this morning. I am grateful for your presence here. That means I'd love to hear from you. I am here to serve you. So go ahead, give me a call at 877-927-6648. Internationally, reach out to us at 727-445-1044. We're about to see the Triple Lindy out here today. Triple Lindy. You ever see that Rodney Dangerfield movie? Well, I don't remember the name of it. He went back to college, I think, or his son was in college, and he ended up going back to college. That was a good, funny movie out there. I don't remember the name of it, but I certainly do remember the Triple Lindy out there. No, it was not Caddyshack there, Alakazam. But look, hey, folks, do me a favor. Go ahead. If you've got a question, somebody else has got that same question, so don't call in for me. Don't call in for them. Back to school. Thank you, Z. Go ahead and call in to help somebody else out. Nothing like a human act of random kindness out there to get the day started. This is Magical Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading off 170 points, trading out at 17,662. S&P down 21 points at 2,036. Composite off 35 points, trading at 46.91. Russell 2,000 off 7 points at 11.91. Gold's up $13. Silver's up 40 cents as we speak. Right now, light sweet crude back $1.59, trading out at $51.10 out here, leading the charge to the upside. We got Intercept Pharmaceuticals. She's up $11, up 7%. Regeneron Pharmaceuticals up 1% of $5. ISIS Pharmaceuticals up $5.50. Illumina up $5. You got Zimmer Holdings up $3.70. Bob Evans. We were talking about Country Ham earlier, at least in the Tiger's Den. Well, Bob Evans, how does that work? Bob Evans to the upside up $3.41. Hey, Buffalo Wild Wings up $3 out here. Of course, there probably was quite a few wild wings sold during the last couple of weeks with all the football out there. Sempra, CEMP, up $2.50. To the downside, we've got Priceline leading charge off $20. Netflix off $12. Tesla down $6. Pioneer Natural Resources off $5. Cimarex Energy off $5. Google down $6. Contra Resources off $5. Ralph Lauren off $5. Amgen off $5 as well. Alrighty, so where do we begin our day out here? Let's do this. Let's go take a look at the ETF structures. Let's go see what we've got volume-wise. Let's start off with the diamonds. We'll start off with the Dow Diamonds. She's trading out at 176.31, volume of 1.2 million shares traded so far today. What the diamonds are look pretty darn strong to me. Diamonds at this stage here are still trading. They're into the session of December 18th, about 10 million shares to the upside. A million shares to the downside in 40 minutes of trading. Normally you'd say a million shares at this stage of the game inside the Dow would be pretty good volume to the downside. The reality is not so fast. Not so fast. Now, it is not exactly in a... Well, let's go take a look at retracements here. Let's go look at retracements from the low. Come on, grab that tool. There we go. All right, grab it again. From the low out here on December 16th up to the high. You're inside the .382 retracement. But here's what we really know. At This stage of the game, so far the pullback inside the Dow Diamonds, light volume when we take a look at the trading session of December the 18th out there. We'll see. Got a lot of time left in the trading session. If we look at the SPY, the SPY, she's got 24 million shares to the downside, trading up $2.20, trading out at 203. Now, this is trading below support level number 1. That is the gap up from that December 18th time frame. Volume there was 257 million shares. Light volume, again, inside the SPY on its way back. It's got light volume compared to that breakout. 253 million shares at the December 17th level. Does look like the SPY wants to try to get down and tag at least at 202.34 level. That is the top of the window, the top of the gap out there. Close inside that, and that says you go down and you test at least the December 16th area. That's what's going on inside of the SPY. If we go take a look at the QQQ ETF out here, the Qs, they have tested that second level of support. That is the high of December 17th. That was at 102.09 out there. At this stage of the game, it has rejected price. That is a total of 79 million. Really, you're pulling back so far today, 7 million. So the Qs, on the other hand, they do have some volume inside of it. Let's look at the IWM, the Russell 2000. Go check out its volume perspective so far today. It has not even tested. It's trading inside December 18th. 54 million shares there. Friday, 46 million shares so far today, 8 million shares. It's got some pretty decent volume inside there. But the first level of support inside the IWM is going to be the price objective, 117.47. 116.99 becomes your second level of support inside of the IWM. That takes care of those 4 ETF structures. When we opened up the show, the first hour, we were taking a look at all 4 2-hour, all 3, I would say, 2-hour charts, the ES, the NQ, the YM out there. And my suggestion is that this market is trying to form L bottom. Yes, a bottom out here. We do see price continue, even inside the ES Mini, even with this little flush we've had here through the 10 o'clock time frame. We have seen the ES Mini push lower with less weakness out there. That has got to make somebody say, something to think about out here. Now, do we have any kind of reversal? Absolutely not. No reversal yet in sight. Do I expect we'll see one? Well, we may see one. We should see one. Do we have to see one? No. You got to wait for the market to communicate to us, and at this stage here, it's not communicated any kind of reversal. We are in the 7th inning stretch, the 7th wave, potential 7th wave to the downside, 4th or 7th wave to the downside in that 2-hour chart out here. It says we need to pay attention to the ES Mini out there. If we take a look at the NASDAQ are really doing the same kind of thing. Now, the NASDAQ making a 1 to 2.618, A to B equals CD to the downside. Also doing it with less relative weakness. Never a good sign for sellers out there. It's saying that the bulls are just kind of waiting to actually do some trapping out here. We'll see if they can do that, or can the bears muster up some more sellers. I don't know the answer. What I do know is they haven't been able to muster up enough. We've had some price destruction, but it is not doing it with any kind of conviction. Of course, that's what the volume was saying to us. So this is nothing more at this stage here than a little markdown sale inside of the ES Mini. Is this the start of something big out here? The answer to that question we won't really know, but I say most likely not. If we take a look at the Dow futures, really also doing the same thing, making a lower move, doing it with less relative weakness. No bullish reversal sign here just yet. Maybe we don't see that until tomorrow. Maybe it happens at 3 o'clock. Maybe it happens at 2 o'clock. Maybe it happens at 12. I don't know when it's going to happen. It just says that we ought to pay attention here for some potential bottoming signals inside of the market. That's if we go ahead and we use the 2-hour chart out here. If we go use the 5-hour energy drink out there, brought to us by our man Saratoga Bob in the Tiger stand out here, we'll see that, hey, we're at least in the 6th wave to the downside as we take a look at the NQ out here. So this is an area where we too can also find some potential support. Now, here's the cool thing about the 5-hour chart out here. We got 2 hammers that have formed. We have a hammer that took place here at 11 o'clock last night. We have another one that was at 4 a.m. The low of that hammer candle, come on, give it to me. The low of that hammer hammer candle, by the way, is 41.97. You are trading out right now at 41.90. But this is a 5-hour chart. This 5-hour chart says that not till 2 p.m. does this candle session close out here. But the NQ on the 5-hour energy chart, you see the NQ get back above the 41.97. That's going to be telling you that it's rejecting its lows, that hammer that is forming out here, that bottom that is forming, is something to be paying attention to. Likewise, a close below that says you've got lower price coming at you. That's what's going on inside of the NQ. If we go take a look at the Dow on its 5-hour energy drink chart out here, for those of you that drink those, this one doesn't look as good because we have seen it close below a hammer candle out here. That was the one that took place at 11 o'clock last night. That's what's going on inside the Dow. Nonetheless, it potentially in just the 6-inning stretch to the downside. Well, let's not leave out the S&P futures contract. Let's go take a look at it, see what it is doing out here. It, too, having closed below its hammer candle from last night at 11 a.m. And it's really the same patterns that we are looking at. I'll say it's the NQ. If we now take a look at these 5-hour charts, it's the NQ 5-hour chart that gives us the best signal out here, bullish and or bearish. Again, so we'll put that up on the screen here. I'll give you those numbers, and those numbers that be really watching are going to be coming into the 2 o'clock time frame. Bullish or bearish, if you see a close back about 41.97, it says that the NQ is really doing what it can to form a bottom. A close below that says we probably have some lower price coming to us overnight into the early morning, and then we will go ahead and we'll pick things up right then and there. That's what's going on inside the future. We took a look at the ETF structures out there. Let's close it down for the day. Let's go have some more holiday. A little more holiday cheer. How's that sound to you? Nah, I'm just kidding. Yeah, we're having too much fun. Let's go take a look at some. Let's go do the roundup here with regard to what's going on in the commodity sector. Let's start off looking at currencies first. Get a feel for what's going on out here. We got the euro, Japanese yen at its low of the trading session out here. Never a good thing for the bulls in the stock market. This says that the euro, Japanese yen could move down into the 140 level. It's 0.618 retracement. That also would form an A to B equals CD, I believe. The A point out here is going to be the trading session from December 8th. Your B point is going to be the December 16th low. Your C point is going to be somewhere out here, I don't know, right around. We'll just use it looks like this little shooting star, December 29th. Okay, you're almost down to the 1-to-1 level out there. Something to think about. That price point is 142.40. If 142.40 does not hold, that says 141.09 would likely be the mark. You're coming into it with a wide-ranging bar, says you just got to sit back and wait out here. That's what's going on in the euro, Japanese yen. If we take a look at the euro, U.S. dollar out here, she is already made on its daily chart. She's already made the 1 to 1.272 A to B equals CD to the downside. No bullish reversal signal, not just yet. Could form a hammer candle, though, today. That is on the euro. And if it doesn't form us. How about that? How's that for grammar? If it does not form a bullish reversal signal, then it wants lower price. Steve Rhodes, TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 188 points right now. 17,645 is what she's trading at. The S&P down 23 points. Had a couple emails come in during that break. One specifically with regard to the euro. So we were just taking a look at the euro as we went into that breakout here. So that was kind of timely. And the question is, Steve, you mentioned the euro going down to 110. How long a time frame will it take to go down to that level? Well, if we go take a look at it, so do a couple of things out here. Let me go back to this chart here that we were looking at just so we can finish this off. So first, we're looking at the daily chart. Now, on the daily chart, we've got a 1 to 1.272 A to B equals CD that has formed. So the weekly was what I was using as a basis for that projection of the 110 area inside of the euro. Now, the key is going to be 1.204. I believe that's the key. That is the point. Well, we'll go back. We'll go back and we'll take a look at the weekly chart out here. And forget about the retracement. So, if we were to see. That might be the B point. So, reframe my thoughts out here. Here's what we know right now on the daily chart. It made a 1 to 1.272 A to B equals CD to the downside. We got no reversal signal out here. So that says until we see that price can head lower. So on the daily chart, if this level fails, then we're going to see the price point of about 117.46 out there. That becomes the target. There's your 1 to 1.618 A to B equals CD. If that level fails, you're looking at 115. Your 1 to 2 A to B equals CD to the downside. So that's on the daily chart. So the daily chart says we've got to watch for some type of reversal signal. What kind of bounce would we get? I don't know the answer to that, but we've got to be paying attention to it. That's first. Now, if we switch back over into the weekly chart, if we go take a look at the weekly chart for the euro, give me a moment here to switch down here. What you're going to see is, and how we're coming up with that price projection. There we go. Okay, we're finally down there. We take a look at the weekly chart out here. Oh, that's the daily chart again. So we take a look at the weekly chart. What you're going to notice is that the euro on Friday had gotten below a swing point, a key swing point out here. This is the swing point that began the week of July 23rd, 2012. What do we know about that swing point? Number one, what we know is that that was a key reversal session and a bullish engulfing. That's the last time that we saw any significant bulls down at that price level, 1.2043. If at any point in time the euro gets back above 1.2043, it could negate this whole pattern altogether. So that's a level that you want to be paying attention to. If, in fact, that is not the case, and old support becomes resistance, and we can say old support only because of the bullish engulfing, not because it was tested out here, because it has not been tested. Well, it's gotten below that level. Now, your 1 to 1A to B equals CD to the downside on the euro US dollar comes in at 1.109. So short of any of those reversals on the daily, short of getting back above 1.2043 out here, that says that that's where the euro wants to go. Now, the question is, what's your time frame out here? Well, if we take a look at time frames, if we can see that in the C to D leg, the euro is kind of following along that time frame, that says not until about July 2015, give or take. You can't, that's the best I could come up with. Now, can it make it in a lower time, in a faster time period? It most certainly can. And if it does in a faster time period, that actually says that the euro would more likely get back to par, 1.03 out here. So the faster that the 110 level hits, the more likely that you are to see price move lower. So the key levels to be watching inside the euro, in my opinion, 1.2043. And then we'll keep watching that daily chart for some kind of potential bounces out here. Now, the euro is moving lower, supposedly, on all of this hubbubaloo. Is that a word out there? With regard to Mario Draghi. Actually going to do some QE. All he does is QE speaking. And so, for me, I'm not short the euro, but I'm very suspect about what it is that we actually see in the charts here in the euro. Because at some point in time, somebody's going to catch on. Now, here's another pattern for those of you that like to trade the euro. What you have to be aware of is that in the month of January, typically January, the middle of January, the end of January, is that the euro forms a significant swing point. Now, because we have the euro moving south, pretty good chance that the swing point is going to be a swing point low. How long will it last? Sometimes they last for a really long time out there as far as significant highs or lows out here. The arrows that you see on my chart are other significant levels in the month of January out there. So that's really how you've got it. And that pattern has worked for like 15 years out here. I don't know why it works, but what I do know is that it does work. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 206, S&P down 25. It's never over till it's over. Selling is not over out here, but how about a couple of those games in the market over the last week? How about any of you catch the Houston-Pittsburgh game out there? I believe that Pittsburgh was up by like 3 touchdowns or something like that, 2 or 3 touchdowns with not that much time to go. I think Houston had 2 onside kicks, 2 if not 3 onside kicks out there, 2 for sure that they were able to recover in just like the last 3 or 4 minutes of play out there. That was a comeback. That was pretty good execution on the part of Houston out there. I didn't see that coming. I had Pittsburgh winning that game all the way, and of course, sat there with my jaw on the ground, saying, "Oh my goodness." I think the point spread on that, I think it still ended up winning that game, if I'm not mistaken, out there. I'm pretty sure it did. But go back and take a look at the pool play. How about the Michigan State Baylor game out there? Now talk about a comeback there. So now you've got a couple of larger schools, obviously, and how about that comeback by Michigan State? So there was some pretty amazing football. Obviously some blowouts out there, but it just proves to you it's not over till it's over. And of course, inside the market out here right now, it is clearly not over. We've got the Dow off 211, S&P down 25 points. Now, if we go go take a look at the VIX index. The VIX index is up 15% as we speak right now. If the VIX index were to close right here, you've got a real high probability of a bounce taking place, at least a bounce, if not a bottom, forming inside the marketplace over the course of the next 48 hours. Now, what do we know about the VIX right now? Number one, it's trading above that 50-day exponential moving average. That's the blue line on the top portion of my chart out here. Anytime that it trades above that, it's a trouble for the markets. It just says that liquidity is running dry. When you got liquidity running dry, that's what's going to start these declines out here that we're taking a look at. The problem that the VIX has is it's too fast, too soon in its move out here. If we take a look at this 50 to 1 standard deviation Bollinger Band out here inside the VIX, anytime the VIX starts getting stretched to the upside out here, it says it's got to come back inside these Bollinger Bands out here. So, I don't think the real top yet is in, but I'll come back and assess it. So you want to pay attention to the VIX index right now. If it closes where it's trading at, which is in the 2057 level, pretty good chance you're going to see a nice bounce in the market. So how do you play that? It depends what it is that you're trading out there. I can just simply tell you with certainty that is the case out here. We got the spot VIX index trading out at 2057, and that is above all of the futures contracts. Every single one of the futures contracts, you've got the VIX trading above. That says bottom. That says big bottom out in the marketplace out here. So you got this little scary stuff that's going on right now. But futures traders are saying, "Are you kidding me? Are you kidding me?" They're not, their crystal ball out here is saying something totally different than what we see inside of the marketplace as we speak right now. Now, nonetheless, the bears absolutely have the ball out here. Even inside the New York Stock Exchange, which rejected its zero line of its summation index right now, it's trading out at minus 72. So we've got really good declining issues out here. And you get the New York Stock Exchange, looks like it wants to go at least tag the 1217 high out here. That's at 10,614 inside the marketplace. You're trading at 10,656 as we speak. But if we take a look at all three of the price oscillators, meaning the composite, the Dow. Now, the Dow had follow-through on Friday to the downside. The composite closed just slightly below the zero line on Friday. You got some additional follow-through here as we speak right now. Of course, how the session closes is what it's really all about. It doesn't really matter what it's doing at 10:38 in the morning out here. But nonetheless, you've got the sellers absolutely have control of the market. If we take a look at what other things can we take a look at, it is not good from a liquidity standpoint, as I mentioned that earlier. The euro Japanese yen currency pair out here, but it is forming a 1-to-1 A to B equals CD to the downside. So it is worth at least paying attention to see what happens. I don't know. There we go. At this level here of about 142.40, wide-ranging bar coming into it. But when the euro trades lower, that too is telling you a lack of liquidity in the markets during a time period where there should be plenty of liquidity, as 401ks, pension plans, and so forth put money to work for the fourth quarter of 2014. Of course, doing that in the first quarter of 2015. Let's go take a look at some things. So that's kind of like the general or the larger overview. Now, we haven't looked at commodities here. Well, we began taking a look at currency pair. Let's go take a look at the hard commodities. You got gold trading up $14 at $1,200. So what does gold really need to do? In my opinion, gold's not doing anything more than it's done for the past several weeks out here. And that's just really been trading sideways. So I can't get a good feel for what gold is doing. Those of you that can do the quick conversion of gold in euros out here, that would probably, to me, and I made some inquiries to see if I could get my charting tools here to do that easy chart analysis conversion, but I can't, unfortunately, or at least the folks that I've spoken to have been able to figure out how to do that. But so what I'm looking at inside gold is gold will get my attention when it breaks that longer-term trend line out here. Until then, Up 15, down 15, up 15, down 15 doesn't really do a whole lot for me inside of gold. Impressive, but no big deal. In the case of silver, up 41 cents, so it's got a nice percentage move out here. Silver really has also been consolidating sideways ever since December 17th. So it, too, not really doing a whole heck of a lot when you take a look at it in the longer-term perspective out here. When you take a look at some of the mining equities, let's take a look at Gold Corp to be specific, which is the number one ETF, number one equity inside of the GDX ETF. It's got a long way to go before it breaks out. It's got to get above the 2142 level out here. It's trading at 1890 as we speak right now. So it's got a long way to go in order to get up there. Let's take a look at some things here, moving to the upside and to the downside as we speak. Let's look at the upside here. ICPT, Intercept Pharmaceuticals, up 8%, up $13 and change. Let's go see what this is doing. I don't see any news behind it. It's got some pretty significant resistance up at this price level right here, which is out at 208.90. You're at 173.25. Fairly impressive today. It's trading inside that swing point. It looks to me like Intercept Pharmaceuticals wants to make a run for the 208.90 level. If we take a look at Illumina, ILMN is the ticker symbol. Pretty impressive on a day that is moving south. This is just really consolidating sideways. Illumina broke out with some nice volume, 3.7 million shares on October 21st. It has come back and it tested that with one-third of the volume on December 16th and December 17th. Right now, this is just consolidating. Looks like Illumina wants to go test the swing point from October 31st, right around the 197 area. ILMN is the ticker symbol. If we look at ISIS Pharmaceuticals, ISIS, up 8%, up $4.86. She's trying to actually take out her high from December 19th. That's a high volume high of 10 million shares, and it's got 5 million shares today. It has the ability to take that out and and set up all kinds of A to B equals CD patterns. The high there to be watching, 67.12. You're at 66.39 as we speak right now, but moving into that swing with volume. That looks pretty darn good. So that says, what's the IBB doing? Because we've primarily hit, I don't know what, it's got plenty of other equities out here, but let's go see what that is actually doing. So in the IBB world, the ETF biotech for the NASDAQ, really not doing a whole lot. So we saw a doji on Friday. You got a doji here as we speak today. Now it did gap down, but it's trading right around the level of 303.96. Volume-wise so far today, 463,000 shares. Was up with about 900,000 shares on Friday. On New Year's Eve, 1.2 million shares to the upside out here. This is not croaked. This is not falling apart as we speak just yet. That is the IBB, the biotech for the NASDAQ out here. If we look at some things that are moving to the downside, let's go look at Priceline, go see what kind of volume we have behind Priceline. Trading off $27, down about 2.5%. December 18th is, this is December 22nd out here that is trading into. That was 900,000 shares. You're into a 217. So you're into it with about the same kind of volume. So Priceline has not fallen apart out here. Priceline, if it does, where Priceline ought to find some support, maybe about the December 18th breakout level, right around 1088.15, but you're at 11.15 as we speak right now. That's what's going on in Priceline. And Netflix, we looked at Netflix earlier. The weekly chart shows that it's really trying to form a bottom out here. The reason I say that is because it formed both a hammer candle out here the week of that began December 15th, doji the following week, and a bullish engulfing last week out here. So this should have some pretty decent support at 315.54. You're trading at 334 as we speak right now. That is on Netflix, NFLX. Pioneer Natural Resources. We have not looked at Pioneer Natural Resources, PXD, today. That's trading down $8 off 5% as we speak right now. Let's take this off the weekly chart, although it's a nice little bull sash candle the week that began December 15th with 18 million shares to the upside. Let's look at the daily chart. So far today, 400,000 shares. So this is trading into This December 17th, December 18th level, that's got 3.4 million shares. So this is pulling back on light volume as we speak right now. Pioneer Natural Resources. Let's look at some of the ETF structures to see how they are holding up. I see I've got a couple of questions that are coming in by email. Not sure if you covered this, brought up in the past, but give me your thoughts on the trend line October 5th to 16th. I'll have to look at that during the breakout here. Let's take a look at for that question, but there's a question here about RIG, R-I-G. That's going to be to take a look at that both short-term and long-term. So let's go take a look at RIG, and then we can come back and take a look at, I don't know, wherever else it was that I was going out here. RIG is the ticker symbol. This is trading at 1704. Had a fairly nice sign of strength out here that was on December 19th. 38 million shares to the upside today, 5 million shares, though, to the downside. Not necessarily too good there, meaning the pullback is, and you're below that level. So it looks to me like what RIG is doing, pulling back into December 16th, that only has 25 million shares. So you got 25 million shares, you're into it with 5. It looks like RIG is going to give you a piece of information short-term at the price level of $15.97. If it closes below $15.97, that's not good. Let's take a look at a weekly chart out here for RIG, for RIG. And on the weekly chart, weekly chart, the volume on that candle session, the swing point is 133 million shares. And again, that's at that same price point of $15.97. So you want to see that level hold. I've got to pull this back even further and take a look at a monthly chart to get some type of longer term feel on the left-hand side of the chart. What is it doing? Okay, so here's what they're certainly looking at. On the left-hand side of the chart is, all these lows back here in 2002 where it's trading at. So the question is, will it hold that level? And if it doesn't hold that level, what does that bring into play out here? And that's a problem. Because if it does not hold, let me see if I can find the actual swing point low. So in October 2012, we got down to 1810. You got anything below 1810 out here? I do not. So that's the number. Inside of RIG, the number to be watching is going to be, oh man, you are trading below 1810. You're at 1703 as we speak right now. So the answer to the question, what do I think about RIG? At this stage out here, you got to let it test last week's low out here. That's for sure. And what you really need is you're going to need to see some additional sign of strength, the reversal signal. Now we had that. You had a little. Looks like piercing candle, maybe bullish engulfing candle, key reversal session December 16th. That low of 1597 is very important to you. If it closes below 1597, you're going to have to wait for some other sign of strength and some other reversal signal out there. At least that's my opinion. Let's go to Denver. Let's go to Daisy. Daisy, thanks for calling. Thanks for holding. How are you doing this morning?
Okay, how are you?
Excellent. Did you have a nice weekend?
Yes.
Good. Was it a good New Year?
Oh, yes.
Oh, excellent, excellent. You wanted to look at Natural Grocers by Vitamin is the name of the company.
Vitamin Cottage.
Vitamin Cottage. Thank you.
Right, they've got a long name.
And tell me what you're doing and how I can help you.
I want to know about an entry point, and I'm comparing it with Whole Foods, over a short and long-term period, and I just, I'm confused about Vitamin Cottage has these huge surges up above, really high over Whole Foods, and then it'll drop much lower than Whole Foods when it drops.
Well, if we take a look at Whole Foods out here, let me do this. I'm going to put both charts up on the screen for you so I can take a look at them while we're going into this break. Can you stay on the line as we go into this breakout here?
Yes.
Okay, so we come back. We're going to go back out to Denver. We're going to talk to Daisy. We're going to take a look at a combination of Whole Foods, but most importantly, we're going to take a look at Natural Grocers by Vitamin Cottage. Ticker symbol there is NGVC. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 206, S&P down 25, Composite off 39. We're going back out to Denver to Daisy. And Daisy's looking to get into a long position inside Natural Grocers by Vitamin Cottage. And what she's noticing, Daisy, good job here pointing out the correlation that exists between Natural Grocers and Whole Foods out here. They seem to be tracking pretty well, so nice job there. And is there a reason that you want to get into this sector, or you're looking at Natural Grocers versus Whole Foods? Just a general question out there.
Oh, I just haven't done much with food companies before, and I watched after Vitamin Cottage went public in August of 2012, and I was kind of impressed. I shop there a lot.
Okay.
And they're about a third cheaper on some goods than Whole Foods, which is just down the block from them.
Okay, that's cool.
So I thought, well, it's tanking now, but boy, when I looked at the 5-day, the 1 month, the 3 months, it has come back much faster than Whole Foods.
Yeah, they've both come off of the bottom really at the same time. I mean, almost at exactly the same time. In the case of Whole Foods, it had formed a bottom back here October the 15th, and Vitamin Cottage was either on that same day or a couple days earlier of last year. Now, in the case of natural grocers out here, it's running into a resistance level. This had a big downdraft on May 2nd. I think you mentioned that. And the top of which is $29.99. And last week, as price started to get up there, it's the daily chart, back on December 31st, as price started to get back up there, couldn't actually reach that level at $28.72. You did get a bearish engulfing candle that formed the very next day on January 2nd, on Friday out here. So you're running up into an area of resistance. The answer to your question, the best place right now with the information that we have as far as where to put on a buy, I would pay attention to two things. In the case of NGVC, I would look at the breakout session that it had on November 21st. So somewhere between 47.65, maybe even 23.84. Could be that level. In the case of Whole Foods Marketplace, the way that these two maybe trade together so that you can watch, Whole Foods broke through its similar type resistance area. Now, in the case of NGVC, it was May 2nd. In the case of Whole Foods, that resistance area began on May 7th when it gapped down with some volume. But price inside Whole Foods is above that level. Whole Foods may find support at 47.87. If it finds support at 47.87, maybe you scale into NGVC. But the ideal trade is, hey, can this thing pull back to the level where it broke out of on November 21st? And that's how I would trade it, because your risk-reward, it's going to be $29.99, where I think this really runs into trouble out here for you.
All right. Thank you so much, Steve.
You bet. You have yourself a nice day. You bet. Thanks so much for calling.
Yes,
that was Daisy in Denver. Now, I had a question. The question I looked in the email was about the markets, basically, and it looked like the question may have been about, and it didn't give me the index, but we're going to go take a look at the S&P 500 out here, and I'm going to switch this over to a daily chart. And the question is, essence saying, if we take a look at a trend line from October 15th to the December 16th low out here, does that become an area for a good buy point? So let's go take a look at that trend line. Here is that trend line right out here, and it certainly is a spot that one could take a look at. And I don't know if it's the S&P or if it is the Dow out here. I would say with regard to a good bottoming pattern, you got to really pay attention to, in my opinion, the futures contracts are going to give us the best signals out there. This is Steve Rhodes. This is TFNN. Stay tuned. Our man Basil Chapman is up next. Thanks so much for spending 2015, at least the fifth day of 2015 with us. I'll see you tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.